what if I told you that there are markets which you can trade 24 hours a day, 7 days a week, non-stop, guys? Anytime you think of placing a trade, the market is open. So if you want to know more about that, that's what we're going to be talking about in this video. And if you're new here, guys, welcome to the channel. This is my channel, Start Trading Right. And my name is Wanda, and I've been trading for 5 years now. So if you want to know about this, or if it's something which you are interested in, guys, this is the channel. We talk everything to do with trading. So if that's what you want, if you want to know about that, please, guys, hit that like button, subscribe, and turn on notifications that you don't miss when you post videos like this. So let's get started to the business of today. So we are talking about synthetic indices. I recently made a video on this channel about a synthetic index World Cup trading contest being held by World Trade. If you want to join, guys, the link is in the description, or you can go check a video about that. So let's get started. So what really are these synthetic indices, and what's really the hype about? So I have here a chart of FX480. This is one of many of the indices which are offered by World Trade. So basically, these indices, they are computer generated financial instruments which are designed to simulate or mimic certain market assets, or like financial markets, in terms of the volatility and the pricing. So they mimic or they simulate how real life markets move, like forex pairs, assets like metals such as gold, stuff like that. So although they are basically not real, but they are really not they are not like the word suggests, synthetic, means that they are man-made, and they are really not based on the price of an underlying asset, a real world asset. That's basically synthetic indices, and they are offered by different brokers, and they depend on the broker. So this which I said I have FX480, it's offered by the broker World Trade. And if you didn't know, there is a trading contest, a World Cup, where traders from around the world compete for grand prizes. There are a lot of prizes. So if you want to know more about that, I made a video. You can check it out on this channel. So like I said, they are synthetic, so it means that they are not affected by things like the supply and demand, interest rates, geopolitical events, as compared to the traditional assets which we know of gold, silver, stuff like that, which are affected by these things. So how really do they differ from these? Since they are designed, like I said, they simulate certain market assets or financial assets, real world assets. How do they differ from these assets? So let's compare these synthetic indices. So first thing you should take note is that these synthetic indices, they are generated by algorithms. So as compared to traditional assets which are based on the global currency, or maybe if you are trading forex, that on global currency markets, assets, stuff like that. Second thing, these things, guys, they never sleep, non-stop. You can be trading this 24/7, 24 hours a day, 7 days a week, non-stop, as compared to our forex pairs which are traded on market sessions. So you have to be waiting for the London, New York session, stuff like that. And also, synthetic indices, they are not affected by economic news, guys. If you know, if you're a trader, if you have been trading things like gold, GBPSG, you know what happens when FOMC or when NFP or CPI happens, guys. The market reacts to these things, but yes, they don't. They are not affected by this, since they are affected by, or since they are generated by an algorithm. So the hype is in the trading of that. You can be trading them 24/7. So that's where that's also I say it's a double-edged sword being able to trade them 24/7 non-stop, but it's also bad to someone who is uninformed or new traders who think that if since the market is open 24/7, they should be trading also 24/7. That's a rookie mistake. That's a rookie mistake. So, guys, this video was just an introduction of what these synthetic indices are. I plan on doing an in-depth series where I talk of a lot of things. A lot of things to do with these synthetic indices and how you trade, the strategy, psychology, risk management, stuff like that. So, if that's something which you are interested in, guys, subscribe to the channel. Subscribe,